and welcome to this edition of the Print Soft Cover, our initiative where we do the digital launch of new books that have come out in the market. And this time we're going to be talking about one really fascinating book to do with the crypto universe and how cryptocurrencies have exploded on the scene in India. It's called Crypto Storm by Mr. Sundeep Khanna. And it talks about, as the subtitle of the book tells us, it talks about how India became ground zero of a financial revolution. Now, amongst other things, the book takes us on a thrilling ride from what the author calls the Wild West of the crypto emergence in India pre-2018. Then it talks about in 2018, the RBI banned cryptocurrencies. And then in 2020, the Supreme Court overturned this, and there's one really fascinating chapter that dives into exactly how this happened. And then from there, it doesn't stop there. It goes on till the FTX collapse in the US and beyond. And so it captures the whole history of how India has been, I would say, grappling with the crypto craze that's been happening. And the book is aptly named Crypto Storm. And we have with us the author, Mr. Sundeep Khanna, who has so kindly agreed to join us. He is a financial journalist, and he has also written several other books which you would want to check out. But first, we'll talk about this book, Crypto Storm. Thank you so much, sir, for joining us.
Thanks so much, Arun, for the warm welcome. And from one author to another, I am in your debt. You, the one who preceded us by your book on crypto. And as we were discussing a few minutes ago, so much changes in this crypto universe that every 6 months you probably need a new book.
Absolutely.
So yeah.
So, sir, I'd start with the first question, which has to do with just the title of your book. You call it a Crypto Storm. And you say that there's a financial revolution that's taking place because of this crypto storm. So, I mean, do you feel that this actually is the level of a storm that's happening in India?
Absolutely, Sharon. I'll tell you the genesis of this book for me was around August 2021. When I first actually started hearing about people trading in cryptocurrencies. And initially it seemed like, just a little bit of an indulgence, some people putting some money into a speculative, investment into a speculative asset class. And then when I started speaking to people around me, friends, whose kids were glued to their computers overnight, buying, trading in cryptocurrencies, I realized that it was a bit more than just a little indulgence, There was something deeper happening there. And that's really where the genesis of this book started. I mean, for me, it was purely a learning experience. It was an asset class I didn't know anything about. And the deeper I went into it, the more people I spoke with it, I realized this is, as I said, this is a storm. It's not a passing cloud. It's actually a shift. It's a climate change, in that sense. So yeah, I mean, I believe that what I have chronicled is really the beginning of the storm, and we're going to see this actually playing out over the next, many years.
And you feel that it is indeed a financial revolution that is taking place?
To the extent, Sharon, that it offers an alternate form of investment, an alternate kind of, I wouldn't still call it a currency, but certainly an investment option. I think there is the beginning of a financial revolution here. And I mean, at least I have no idea where this is going to all lead up to. But I certainly feel that it's going to it's going to shape our financial system and change it in ways that we actually can't see at this point of time.
Right. And so now you've also spoken in the book about how crypto trading has changed people's lives, and that the get rich quick thing was a major draw in the beginning. And you actually have talked about this tale, throughout the book. You have peppered each chapter centered around an individual, and we'll get to that. But starting with the tale of Ali Beg, you tell the readers about how the crypto craze entered small town India. Could you tell us more about this?
Sure, sure. So, Sharon, the numbers are very telling. So we've got about more than 10 crore people who have some form of crypto investment in this country, which incidentally is larger than the tax base of,
Right.
of India. It's also larger than the number of demat accounts in this country. So direct equity or through mutual funds, the number is I think about 5 to 6 crore, and you have about 10 crore Indians investing in cryptocurrencies.
Right.
And about 80% of that number is between the age group 18 to 35. So it is in that sense a young woman's game. And when you go deeper, you realize that in terms of density, it's really the smaller towns, the tier 2, tier 3 cities where you find much more of this happening. And I suspect that is because the pandemic years were years when livelihoods were certainly affected,
Right.
jobs were not available. People also had more time at home to actually explore new opportunities. And I think that's really all come together. And which is where, I talked about this person in Udupi, but even many other smaller towns, Chidambaram, for instance. I heard stories about, entire streets which had become hubs of crypto trading. There were panwalas who were offering people that, you give me the money and I will invest on your behalf into crypto, this thing. And obviously that led to a number of scams, and I'm sure you are aware of those. But, that's not unusual. In the beginning of any kind of financial revolution, that's pretty much par for the course.
Right. So, so now you've mentioned the scams, but that's only one element of what you have talked about in the book. So in your book, you've talked about the scam artists, you've talked about celebrities getting into it, and you've talked about small town India also getting into crypto trading in a big way. So now, who, according to you, is the typical Indian crypto trader? Is this somebody now in the post-pandemic world? Is this somebody with money to spare, or is this somebody who doesn't have that much money but is looking to make quick returns?
I think that's spot on, Sharon. Absolutely. I mean, it's now, of course, a lot of big money is moving into crypto trading and crypto investments. The biggest investment banks in the world now moving fairly large amounts into crypto asset. But the typical Indian is a person who really doesn't have too much money, wants to, sees this as an opportunity to make, money very rapidly. And also has the technical, skills to be able to understand this world, because it's not a simple, you don't buy an asset and then sit back and wait and, hope for it to go up. There's a lot of skill involved. There's a lot of actually understanding involved in terms of
trading. And it's much more
cryptocurrency.
fast moving than, say, investing in a mutual fund. You invest it and you just watch it grow.
Absolutely, absolutely. And here, the decision making is actually with you. Typically in a mutual fund, you put in your money and there is a fund manager who manages your fund. And, you really have very little control over what happens with your money. Direct equity offers you a little bit more of, by agency over your investment. But again, the sense everybody has is that the equity markets are kind of, if not rigged, but certainly they are skewed in favor of the big traders. Here you have complete control over your own, over your investment. And, people watch it like a hawk. And like you said, I mean, it moves so rapidly that you can go to sleep at one price point and then get up in the morning and either be wiped out or, become very rich.
Right. So now leading from there, the government's attitude towards cryptocurrencies has evolved somewhat over time. But right now, their current policy seems to be that if you make a profit, we'll tax you on it. But any losses that you make, you fall prey to a scam. Any kind of money that you lose, you're on your own. And now, do you think that this is something that needs to evolve, or is it good that the government is steering clear?
No. Most certainly, as you said, Sharon, I think the word that really describes the government's whole role in all of this over the last 3 years is ambivalence. Which is that, look, and I think that the government needs to take a stand very quickly. But the problem is it's not a domestic thing. it's so interlinked with the rest of the world that I suppose the idea is that let's wait and see if there is a kind of coming together of countries on this issue. And most countries are grappling with it. I don't think the problem is that, it challenges the very authority of the central banks across the world. And, for the last so many years, so many decades, the central banks have been the last word on money in any form. And, today you're kind of challenging that. It's going to be extremely difficult, which is where we've seen the central banks saying, okay, why don't I launch my digital currencies? And, there have been some attempts here and there. The RBI has also launched its own digital currency, which is not really going anywhere. But the government's response, very interestingly, so when this whole thing started off in 2019, there was a bill which was supposed to be tabled in Parliament. It was called the cryptocurrencies, and it was a long thing, but basically called the cryptocurrencies, ban on cryptocurrencies.
Yes.
And from there, now it's completely, the ban part is gone. The government has started taxing it, which means you have accepted that it's a legitimate form of investment. All you're saying is that you've got to pay me the taxes. And yet we keep hearing voices. The RBI, for instance, still maintain that, it's evil. It needs to be banned. But at the legislative level, there isn't that kind of clarity on it. So there is a lot of ambivalence. And I believe that the longer this ambivalence stays, more and more people will fall prey to, to scamsters. And that's really the dangerous part.
And in your book, you've kind of equated what's happening with cryptocurrencies now to, say, when the world economy is moved away from the gold standard, and also when all of the or most of the European nations banded together to form a single currency. Those were monumental events in the global economy. But you feel that cryptocurrencies are or could become at par with that in terms of impact?
Look, you're an author, so you'll understand that for an author, it's very difficult to actually pronounce judgment on any kind of this thing. We are there just to chronicle an event. But all the signs are exactly as happened, when the euro was first launched, or even before that, the gold standard was kind of abandoned. So we can see the changes in the environment, changes in the business, this thing. And like I said, today Morgan Stanley, JP Morgan, all of these people are moving large amounts of money into crypto, and they wouldn't be doing that if they didn't send the sense that this is something for the future. It's not something that's going to disappear over the next few years just because, and it's quite clear that the central banks are not going to ban this now. So if you look at all those signs, it points to a major shift in the way we look at global finance.
Right. And now to all of you watching, I think we must make it clear that neither of us is going to make any recommendations on which cryptocurrency you should buy. But keeping that in mind, in the book, you've also talked about how, given time, most of the cryptocurrencies are going to fall by the wayside, and it's going to be just a core few that remain. You feel that that's something that will happen more over the short term, or do you think it'll take maybe a decade or so?
It'll probably take a little longer, though maybe not so many decades, but maybe the next 3 to 5 years. But typically what happens with any currency, and that's true about cryptocurrencies too, the more people trade in a particular currency, the more, the velocity of trading increases in that. The currency then becomes the standard in that sense. And we can already see, I think Bitcoin is about 70% of the total cryptocurrency base, and Ethereum is about maybe another 15 to 20%. So between these two, I think, that's really the dominant this thing. And then from time to time, there's a Shibu or one of these new currencies that come up. I mean, there are almost about a few thousand currencies in some form, cryptocurrencies in some form or the other. Most will clearly, just die away or remain, little oddities that people preserve for whatever reason. People cling to, for instance, penny stocks. You stick to it and say one day maybe it'll just it'll come out of the closet and it'll make me money. So that'll happen, but largely it'll be dominated by just a couple of, maybe a new currency might emerge at some point of time. But I don't see multiple currencies, or at least that's not what the experts opine about.
And in keeping with what we said about not making recommendations. But the thing is that the larger cryptocurrencies are likely to be the more stable ones in terms of you might not get super high returns, but you're also not likely to see super huge losses.
Absolutely. I mean, we've seen that when the whole Sam Bankman-Fried thing happened in December last year, and there was an almighty crash, or even before that last year in May when Terra crashed. So most currencies actually completely got wiped out. 99% of their value just disappeared overnight. And the first ones to recover were these large currencies like Bitcoin and Ethereum. And Bitcoin is now more or less back to its original level of 22,000. So in the recovery, you can see the stability of some of these large, cryptos.
And then, of course, there is the entire gamut of stablecoins that have emerged, which are pegging themselves to real-world assets or currencies. So, at which point, then what is the draw for investors to that? I mean, if you're pegging, say, a stablecoin to the rupee, why not just invest in the rupee?
Sure, absolutely. I think two things have happened. One is, of course, the notion that a stablecoin is stable. It disappeared when Terra collapsed last year.
Absolutely.
Luna was actually pegged to the US dollar, and the understanding was that it's never going to collapse since it's linked to the US dollar, and then it collapsed, lost 98% of its value. So I think from there on, the concept of stable currency has become a little less stable. And two, stablecoins obviously don't offer the kind of returns that you could get in the rest of cryptocurrencies. So also that for that reason, again, they're not that much that popular as some of the other currencies. So I think stablecoins are becoming a bit of a misnomer. There is one, no stability about it, and two, like you said, if it is linked to the dollar, then you might as well bet on the dollar directly.
Right. And now coming back to the book, you, as I had mentioned earlier, you focused almost every chapter around particular key individuals. And this actually, at least to me as the reader, I saw that this personalized the story of cryptocurrencies in India because it's being driven by individuals in your book. But do you see that overall the history of cryptocurrencies in India has been driven more by individuals than by institutions or organizations or even the government?
And certainly the government has not had much of a role to play in it, except that it's more in omission. Since they haven't been there to regulate the thing, it's allowed the phenomenon to play out. But you see, my focus on individuals, Sharon, also came from the fact that one, I don't think I had the understanding of the technology to write a book about the technological revolution that's taking place. What I really wanted to understand is what is it that's driving Indians suddenly over a 3-4 year period. I mean, Indians are generally not risk-taking in terms of, our participation in the equity markets is among the lowest in the world in terms of.
And we love our gold.
We absolutely, we want stability. We want, safe havens, fixed deposits or even mutual funds, Direct equity participation from Indians is very, very low. And yet in a 3-4 year period, suddenly, people are just, their lifetime savings. People are putting their houses out on mortgage, raising money on that and putting it. So I really want to understand what is the kind of person and what is this person thinking about when they're investing in it? And also at the other end, who are the kind of people who are getting in and forming these, for instance, these trading platforms or doing the algos for all of this, which is where I wrote the story of Ashish Singhal of, CoinTrade. So, again, that's interesting. You asked a question earlier about small town India, and you find that a lot of entrepreneurs who got into this space are also from small town India.
Right.
And, then they become in turn role models for people in these small town India, because you can see, one of your own going out there and becoming a millionaire overnight by setting up a trading platform. You say, why don't I participate in this phenomenon myself? So, to the extent that it's been shaped by individuals, but I think there is to be honest, a bit of a herd mentality also. I've heard my neighbors made money. I've heard friends who made money. So why don't I do it? So that also drives the
But the herd mentality seems to work more on the positive than on the negative. Like when you hear a person has lost all of their savings, you somehow feel that that's not going to happen to me. But if you see that somebody's doubled his money, then you're like, why can't it happen to me? And you go with the herd like that.
That's we are in the realm of behavioral economics. That's exactly how it is. Also, people don't really like to share stories of losses. If I don't have money, I'm not going to talk about it. But if I made money overnight, I'm going to talk about it to my neighbors, to friends as well. So I think that you're right. On the positive side, it's more of a driver than on the negative.
Right. But overall, this individual driven approach that you've taken to the book, I have to say that it's made reading it far more fascinating, far more interesting, far more engaging. And so I would urge readers to pick it up. It's available in your bookstores. If you want a refreshing take on what's happened in cryptocurrencies in India. And now, sir, I'll come to my final question, which has to do with how you've concluded the book. You close the book with a chapter on why we need cryptos. And now my question is, number one, do we need cryptos? And basically, do we need currencies that are outside the realm of these Reserve Bank of India or the central banks of the world? Is this a need, or is this something that because it's happening, we need to regulate?
It's obviously stems from what I gathered from talking to lots of young people. There is a growing suspicion about institutions, about existing institutions. There is this feeling that we are getting left out because the institutions are controlled by big lobbies or big cabals. And there is this need for that people are looking for their own space as well now, and especially younger people. And I talked about how this revolution actually goes into areas like education, for instance. I met a young boy who actually gave up a dream to do an MBA and said, look, why don't I just get into this? I can understand, I can do a short-term 6-week course from anywhere on crypto, then I can get into business on my own. So it seems like an alternate route, a different path for many young people. And I think we need to recognize that. And whether it is within the existing framework of, the central banks and the current currencies, if we can find a parallel path, it would be great. If not, then I think this is going to evolve on its own, no matter what you, I, or even the government want to do about it.
Right.
So that that's the sense that I got speaking to, like I said, this cohort of fairly young people. 18 to 35 is a younger group in terms of investors, and it's I think they're looking for a different financial world, and I think we need to provide that in some senses.
Right. And so on that note, we'll finish this discussion. And so please pick up Crypto Storm. It's available in your bookstores. And I can tell you that the author, having, worked as a financial journalist, has brought the journalist's ability to not only report from the ground, get stories that nobody else really looks at, bring that to you, and also write with a kind of brevity that doesn't bog you down with a lot of details. It makes it engaging. I would wholeheartedly recommend this book. Thank you all for watching, and please go pick up the book. Thank you so much.
Thanks so much, Sharan.